I'm going to open the meeting at 4 p.m. I need to read a checklist that is the criteria that authorizes us to meet remotely and also gives access information. As chair, I've got the wrong one here. As chair of the Finance Subcommittee, I find that due to the state of the emergency declared by the governor as a result of the COVID-19 pandemic, and in accordance with the governor's emergency order number 12 pursuant to Executive Order 2020-04, this public body is authorized to meet electronically. Please note that there's no physical location to observe and listen contemporaneously to this meeting, which was authorized pursuant to the governor's emergency order. However, in accordance with the emergency order, I'm confirming that we are providing public access to the meeting by telephone with additional access possibilities by video or other electronic means. We're utilizing Zoom for this electronic meeting. All members of the Sanborn Regional School Board's Finance Subcommittee have the ability to communicate contemporaneously during this meeting through this platform, and the public has access to contemporaneously listen and, if necessary, participate in this meeting through dialing the following phone number, which is 1-646-558-8656. You can also log on to the meeting. The logon information is at sau17.com. If you look at the front page, the home page, and click on upcoming meeting links, that'll bring you to the link to watch the meeting. Providing public notice of the necessary information for accessing the meeting. We previously gave notice to the public of the necessary information for accessing the meeting, including how to access the meeting using Zoom or telephonically. Instructions have also been provided on the website of the Sanborn Regional School District, and again at the website. Providing a mechanism for public to alert the public body during the meeting if there are problems with access. If anybody has a problem, please call 978-482-7394 or email at helpdesk@sau17.net. Adjourning the meeting if the public is unable to access the meeting. In the event the public is unable to access the meeting will be adjourned and rescheduled. Please note that all votes that are taken during this meeting shall be done by roll call vote. And also if there is anybody watching the meeting and they want to communicate with us, if they would email Matt at mangel, A-N-G-E-L-L, at sau17.com. Matt will read your emails.
That would be sau17.net.
I'm sorry, .net. Thanks, Matt. Let's start the meeting by taking a roll call attendance. Would each member state their presence? Please also state whether there's anyone in the room with you during the meeting, which is required under the right to know law. So you want to start, Jamie?
Yeah, Jamie Fitzpatrick. I am in my office alone.
Jim Baker, I'm in my office alone.
Dawn Dutton, I'm in my house basement alone.
Okay.
And I'm Matt Angel. I'm at my office at the SAU office.
The first order of business, we need to pick a chairman. And I'd like to nominate Jamie Fitzpatrick as chairman. Can I get a second for that?
Second.
Thanks, Jim.
You're welcome. Okay, so if we can have a roll call vote, Jamie?
Aye.
Myself, aye. Dawn?
Aye.
Thank you. And I'm just going in the order that I see our pictures on the screen. So, okay, Jamie, here's the gavel.
Yeah, thanks so much.
You're welcome.
Review of the minutes, I guess, is the first thing on the agenda. Has everybody had a chance to review the minutes?
Yes.
Could I get a motion to accept?
Motion to accept.
A second. Roll call vote. Don, get your hand up.
No, I was going to second. I
okay.
didn't think if you were seconding.
Roll call vote. Jim?
Yes.
Don?
Yes.
Myself, yes.
Hi,
And-
Tom.
Hi, Tom. Revolving fund balance is next. You want me to bring each one of these up, or have you had a chance to read them? I could always share them on the screen, but I think that'd be a bit cumbersome unless you want to see them.
I can read them out if everyone would want. I can and just get that done quickly.
I think you should, so that if I don't think we have anyone listening, but if we did, they'd want to hear it.
There are 5 people on YouTube right now, and I'm one of them.
Okay.
So Special Education Expendable Trust Fund, the current balance as of March 31st, 2020 is $237,356.78. Let's see, the Capital Improvement Maintenance Capital Reserve Fund has a balance of $145,622.05. The I'm sorry, I'm reading the prior
I
year.
was gonna say, those are November's numbers, Matt.
Yeah. Okay, so let me start over again. Special Education Expendable Trust Fund is $240,569.42. The Capital Improvement and Maintenance is $172,596.89. And the Facility Use Revolving Fund is $193,866.46.
And then Matt, go ahead.
So next month, you're going to see a payment. Well, actually, you see a partial payment, $25,000 going into the capital improvement maintenance for this month. The other balance didn't show up on the report. I'll make sure it gets included for next month because there's a new capital reserve fund that was funded.
Yep.
So that question,
Yep. Go ahead.
that was the 25,000 is for what was funded in the warrant article?
Yes.
Okay. So that's not an expense, that's a addition.
That's an addition.
Correct.
Okay.
And Matt, is it a correct statement? I believe it is, but I'll just ask you to get it on the record. The only changes in the fund balances are accrued interest and the transfer of the $25,000 into the fund. There was no expenditure since we last did the November date. Is that correct?
That's correct.
That's what I thought. Yeah, Jim?
So Matt, the 25,000, is that included in the 72,596 or is that in addition to? For the capital improvement?
Yeah, so it's included in the 172,596. Yes.
Okay, thank you.
I was gonna say if it's 72,000, something happened, and I
Yeah.
was about
No.
to ask about that, but I was just letting it.
No,
work
it's
itself
one
out there.
172.
It's 172.
Yeah,
Did you
I
hear
think it's-
72?
Yeah.
we heard
His
70.
mic dropped out.
Yeah.
And anything else on the revolving fund?
No.
Okay, on the budget reports, Matt, would you like to direct us to on the budget reports?
All right, so I have to, boy, the numbers are small on this.
You can hit Control Plus and they'll
Yeah.
enlarge.
All right, so on the health insurance, now this is through the end of March. We have expended 2.9 million. We've encumbered an additional almost 1.6 million, which we have $13,000 remaining for
Wow.
insurance. Okay.
Yep.
For Don's benefit, an encumbrance is a reservation of the appropriation that's authorized by town meeting. Meeting, and we encumber all health insurance through it. Well, salaries, health insurance, and a lot of other purchases through the end of the year. So 413,000 remaining balance is a fairly good representative balance that we're going to have at the end of the year.
Okay.
All right. So now if we go to all other expenditures.
But Matt, before you move on, one moment, Jim.
Yep.
For again, for the benefit of the audience and for Don and for myself also, for adopted budget versus budget, can you explain the difference between adopted budget and budget, since it's for the same time frame, 7/19 to 6/30/2020?
So we're required to report two different sets of budgets. The first one is the adopted budget, which is the budget that's approved by district meeting. These are the taxpayers. They're okay. So as the budget flows, it goes from management to the school board to the budget committee and then to the taxpayers. It gets approved. That's the adopted budget. Now, during the year, the management can make movement of budget funds up to a certain dollar threshold per school board policy. And then anything above that dollar amount has to be approved by the finance committee. And so any movement of the appropriation would then be reflected in the column called current budget.
Thank you.
Okay.
Jim?
Yeah, Matt, could you explain the relationship in that on that page between, I'm leaning over to look at a different computer, the last year period and the rest of those columns?
Okay. So the last year period is it's actually through the end of the year. So it's 4,587,000 is what we spent on health insurance last year. And that's actual expenditure. Okay.
And that's for the entire 12 months.
That's for the entire 12 months.
Okay. And right now, including expended and encumbrances, what is that? Is that 20?
So expended is through the end of March.
Right.
And encumbrances is through June 30th. If I don't include June 30th, the report would drop off that 1.597 million.
Right. But if you add the 1.597 and the 2.969, that should pretty much be what we're going to spend for insurance through the rest till June 30th. Is that right?
Yes. So when I added it together, I'm since I'm in my office, my 10 keys right there.
Yeah.
We're anticipating spending $4,567,275.
So a little bit less than last year.
Just a
20,000 less.
Yeah.
Okay. All right. Thank you.
Yeah, and that
Which
answers.
is,
Go ahead, Tom.
it's a very positive thing,
Right.
right?
very good
I mean,
news.
Is that because of the change in the district contribution, or is this for some other reason?
it's both.
No.
Okay.
There's so many moving parts in the health insurance, and it could easily be that we had one employee retire at a family plan or leave at a family plan, and we
Right.
brought on a new employee at a single person plan.
I see. Sure. Okay.
I just want to make sure for the public's understanding, we really don't have a lot of control over these costs because the collective bargaining agreement dictates what the rates are in terms of the relationship of what the district pays and what the employee pays. And then in addition to that, there's typical increases from year to year. So when I say that it's really great, it means that we probably had people retire that were on a full family plan, and then some people hired that took a single plan. And that's really where the up and down of it is. We've also, for next year, you'll see it go down because we've reduced some positions in the current budget that is going forward. So it may go down, but then when we hire the paras for the reading program, it may go up. So we always have to have room in there because insurance is a very dynamic number that goes up and down by almost $10,000 per employee, depending on whether or not they are taking full family, single, or a partner, double. So it's a very tricky number to calculate annually.
Jim?
Yeah, thank you. And I've noticed that insurance is one of the areas where we typically have quite a bit of money left over from what was actually budgeted.
Yes, and that's done intentionally because we don't know which way it's because it can swing really far. The fact that it was pretty steady this year is wonderful, but I don't want anyone to think that's a norm or that Matt and I did anything differently.
It actually
to make that
is a norm if you go back and look over a series of years.
Right. Exactly, which is great. We're doing great with it. That's fantastic.
Anything else on the healthcare piece? Okay, go ahead, Matt.
Okay, so for the amount expended, this is non-healthcare expenditures. It includes payroll and all other purchases. Ended through the end of March, $19,403,530. We've encumbered to the end of the year $8,978,684. And again, encumbrances represent both payroll and other purchases through the end of the year. And so we're anticipating right now a remainder of $1,612,000. Now, we could have additional purchases that are after March 31st that would affect that balance.
So some of the encumbrances, I expect, are your regular labor costs have been calculated out through 6/30. Is that a correct statement, Matt?
Yes, that's correct.
So other things that might come up that have to be expended would be netting out against that 1.6 million. One of the things that you mentioned is the bathroom was not included in the encumbrances because we do not have a finalized and approved quote yet, correct?
That's correct. And I use the purchase order module to do contract management with it. So when I approve a purchase order for whoever is getting approved, you'll see the amount remaining going down. Okay.
And then we'll be able to see that again during the different meetings. We'll track that. Tom had his hand first.
Oh, sorry.
Tom, you have
We're not.
You're
You're
unmute.
muted, Tom.
Oh, it wouldn't let me unmute myself at first, and then it did.
That was Jamie.
No, I have
Thanks,
no
Jamie.
control.
Oh, he loves that.
Yeah, tell me I got that power.
No, I was just going to say also the other agenda items that we're discussing. So there's the software for the finance department, the bathroom, but I just didn't want the public. I wanted them to know that we're also adding plumbing to the science rooms for the middle school move. And there are some modifications to the locker rooms that would also come out of there. So I just wanted to be transparent that there are a few really big ticket items, but don't forget there's also $400,000 that was held back last year. And I assume that Matt will be addressing that today as well.
Yeah. Matt's got his hand up because he might be commenting on what Tom said.
But I was after Tom, so I'm ahead of Matt.
Yeah, but he might be commenting on what Tom
Okay.
said.
All right.
Hear that.
Okay.
All right. So tonight we're going to be discussing the memorial roof, and we're going to have a discussion about taking it from the appropriation or taking it from the reserve. So I just want to point out for Dawn's benefit that if we take it from the appropriation, it's going to come off the amount remaining, and that's it.
Okay, Jim.
This 1.6 million before deducting for bathroom and other expenses that we're planning on doesn't include revenues at this point that we haven't collected, right?
This never includes revenues.
Okay.
If you're going to want to try to figure out what you anticipate with unassigned fund balance at the end of the year,
You've got that coming up, I think, don't you?
yeah. But the quick basic calculation is you take surplus revenues plus surplus or the amount turned back of appropriation, and that should be the amount that's going to be used to reduce the tax rate next year.
Okay. Thank you.
So go ahead, Tom.
Well, go ahead, Jamie. It's okay.
I had a couple of things just for some clarification points. Another item that's out there that Tom has mentioned in the past is the memorial school in the cost of doing the entryway for the memorial school. And for a how the system works question, Matt, just for our viewing audience and ourselves. If in fact, the point you just made, we end up taking the money from unexpended funds or unencumbered funds rather than from a reserve, in order to refill the reserve, does that have to go through warrant, or can unexpended funds be put back into the reserve? How does that work in the system?
Okay, so legally, if you're going to put money into a capital reserve fund or expendable trust fund, which is the reserve that Jamie was talking about, it would have to go through district meeting.
So to answer the question,
that's what I thought, but I want to verify it.
So Jamie, may I? I'm sorry. This is so hard to do this way. I apologize. So I made a little list here of outstanding things that I want people to be aware of. There's the roof at Memorial. Jamie, thank you for bringing up the Memorial's office, which we are in the midst of getting. The building's empty, so it's logical for us to do this now. Our plan for the Memorial office is to do it internally, but we do want the architect to draw up plans. It's the movement of one wall and the installation of 2 or 3 doors and some safety glass. It is going to be I think in the end, very reasonably priced, even compared to the original price when I was hired, and the capital improvement plan 3 years ago was 260 grand or more. I got it down to 60,000. Matt's trying to really get it done as inexpensively as possible, and we'll know more early next month. Okay. There's also paving that's going to need to be done at the high school in order to change the flow of traffic for the middle school and elementary school pickup. Middle school and high school pickup. So Dawn, I know you had brought up at a board meeting that you were concerned about that. That's on we have a plan that we're going to bring to the board very soon. And now that it's nice enough out and we're getting ready, that will occur as well. So really there are 6 major items: the science water being put in the science rooms at the high school, the paving at the high school, the modification to the locker room, the bathroom at the high school, the memorial office, and the memorial roof are all must-dos at this point, because where teachers are going to be moving, they pack today at the middle school. So they're moving May 11th. So it's all in progress, but we'll be bringing quite a bit to the board on May 6th to approve with regard to the memorial office and the bathroom. That's our plan. As long as the architect can get the office plans back, that should be a pretty easy fix. So I just wanted to clarify for everyone that when we're talking about $1.6 million, there's a lot of ticket items that aren't paid for yet. And it is typically my opinion that we should spend down what we have been appropriated by the community before we start tapping reserve accounts. Reserve accounts should be for emergency purposes, right? Because they're hard to build up, and you'll see that I'm going to want to build those up more in the future so that we can cut the budget in places that there have been, as Jim said, we've been really lucky with insurance. For 4 or 5 years, it's gone really, really well. If we have reserve accounts, we can make that account a little bit tighter when we bring the budget to the voters so that we don't have so much left over at the end of the year. But there has to be about a 4%, 3 to 4% amount in various reserve accounts that we can use in the event of an emergency. And I define emergency as we've spent down a lot of the budget, right? We're getting nervous. And we manage money very, very carefully so that we give money back. And I certainly intend to continue to do as much of that as we can. But I think it's just important for the community to hear that this is, there are a lot of items this year. There also is income coming in, so we'll know more next month.
Yep. Okay, any other questions on the?
Sorry, Jamie, you cut out.
Oh, I said, any other questions on the expenditures section? Expenditures, revenues are all set there.
No.
Okay. The next item on the agenda is the review and approval of the new financial accounting software. Matt, could you step us through that?
Yeah, so we have we have a system currently that is out of date, and it's on the verge of not being supported. We're actually, I think, within a year or two of not being supported. So our software company is trying to get us to move to a product called Infinite Visions. And Tyler Tech is our software company, by the way. And to make the move to Infinite Visions, any accounting module that we currently have, they're going to transition it to Infinite Visions for free, and then we're going to have to purchase any other modules that we currently don't have, and then we have to pay for implementation costs. So let me just quickly step you through this. So with
Question.
Go ahead, Jim.
What's the difference between transitioning and implementation?
I think it's going to be pretty much the same because it's a new piece of software. So we're implementing a new piece of software and we're moving all the data from ADS to the new system. Did they transition specifically within the quote?
Oh, go ahead, Jim.
So the upgraded software is free, but transitioning it to work with the applications, there's a fee for that.
Yeah.
Okay.
So we're asking for $17,000 for additional modules that we currently don't own. All right. We're asking for, let's see, 58,000 for Tyler Services, which includes implementation, which is we're going to get a person to come in and help us transition or teach us on the new software and guide us through moving the data over from the old system to the new system, conversion of the data from the old system to the new one, hosting fee. So we're going to be, instead of having the software on a server locally, we're going to ask the software company to host it remotely, which is going to be in Maine, and then project management lead. So the total cost to transition to the new software is $76,303. Now, they also put in an anticipated recurring fee, which is $10,373, which is the software and annual maintenance for every year. We're going to have to pay just over $10,000. Now, just to make a quick comparison to our current system for just support, I included a copy of the invoice. If you look at that invoice, we're currently paying almost $17,000. So it would be a reduction of about $7,000 to the new system. And then also I gave a copy of an invoice from another software package that we have, which is called Frontline. Frontline does our HR time and attendance tracking. And what we want to do is we want to transition the time and attendance tracking to the new software. And so we were going to be able to remove, and I believe it was something like $23,000 off of the annual maintenance contract for that HR system.
Great.
Jamie, can I speak?
Yes. Sorry, I was trying to get on the other.
I just wanted to clarify a couple of things for the community. I think you understand, Jim, but I'll just say it. Transitioning is when they come in and help us move a very significant amount of sensitive information from one system to another. That's transitioning. Implementation is when we turn the new system on and it becomes live and it becomes implemented. So
Okay.
there are two different terms. One is transitioning, which is moving it all, which is we have to have them help us because it has to be perfect.
Right.
We're talking about, Social Security numbers, income, insurance information. But the reason why we want to do this is that Tyler is phasing out the software we use, but we also see longer term savings because they'll be hosting the software on their server, which is going to save us on the tech side as well. So there's the HR savings, there's a potential tech savings, and then there's a potential savings in the maintenance agreement, well, a clear savings in the maintenance and HR modules. We also think it'll work smoother and make greater efficiency at the central office because the two systems will talk to each other. And right now we have to manually do some of that.
Mm-hmm.
So there's many modalities to the benefits.
Okay, Matt?
I'm going to pile on some more things that it can do. Our current system can't pay our vendors by ACH, and this new system will allow us to do it. So we're going to be able to get rid of a lot of checks, a lot of mailing, and reduce some processes. Now, there's some other neat things that it can do, and I believe it can, if you scan in invoices, it can also do data entry, which works something like 30 to 40% of the time. And if you think about it, that's a huge amount of time savings. So it's more of a modern system that should be beneficial in the long run.
And Matt, can it answer my annoying questions before I have them?
He said it, not me.
Jim, go ahead.
Yeah. I remember when we were talking about this last year, Matt, you gave us some numbers, and I think also the previous business administrator gave us some numbers to compare. If we went out on the market and bought this software from an alternative competitor, is it correct that it would cost us $300,000 to $400,000?
Yes.
Okay.
I bought a similar system before, and it was $300,000.
So right off the bat, we're saving that, the $300,000.
Mm-hmm. Thanks for asking that.
Yeah.
So just a question, Matt. You'd mentioned the frontline. So frontline invoice that you'd sent is $42,000, but this is going to replace all of those pieces, right? It's only going to replace some of those pieces.
That's correct. That's correct.
So what are the pieces? It's going to replace time and attendance, absentee and substitute, or just time and attendance? What exactly is it replacing?
I believe it's going to be time and attendance and absentee and substitute.
So time and attendance for those watching is 13,009, and absence and substitute is 9,003. So that is 23,200 reduction on an annualized basis, right? That would not be recurring. And the cost you're quoting, the 74, most of that is one-time cost. The recurring, I think, was 17 overall for everything.
10.
Is that correct?
Right, it was 10, yeah.
10.
Wait a minute,
But there's two different items to that, if I recall. If I missed it.
Oh, there is a $7,000, $7,500 hosting fee.
Oh, okay.
Okay.
Yeah.
That's included in the summary total for recurring fees. It looks like $10,373 is what would be
Yes.
coming in.
Don is correct. So 10,373.
Is the total quote for
For
the,
recurring fees, yeah.
for the recurring fees? Okay. I had thought that I had to add the 7,000 into that, but you're saying that's inclusive.
That's included.
Thank you, Don. Jamie, can I just mention too that we're going to save 7,000 because we're currently paying them 17,000 in recurring fees right now, and that will go down to 10, right, Matt?
Let's see. Yeah, recurring. Yep, that's correct.
It's almost a $30,000 annual savings.
Yeah, that's what I'm coming up with, 30,000 on the annual savings side.
That covers a para's salary that it's great. I mean, that's awesome.
So Matt, another question. I believe you had said that this system, if this is the same system I'm thinking it is, would allow people on the board to be able to click in and be able to see invoices and supporting document of line items from the manifest. Is that a correct statement?
Yeah, that's one of the things I'm hoping that it will do. They do have modules for it. I'm not entirely certain that it's there. I asked for it. Well, if it's not there, I'll bring it back, and I want to make sure that it's included.
I would like that too. That would make things a lot easier.
It's a public access portal. So the public can go onto the website and access the accounting system and download data.
Jamie?
Yes, Jim.
If for some reason that isn't available, or it's to some degree limited because of HIPAA rules and other things, is it going to be able on the, when we get the manifests some emailed out to us, is there going to be an ability to be more descriptive about some of the expenses?
In systems like this, and I'd actually have to see it to say it would happen, but there's a system. If I send you the manifest, you should be able to drill down on the data and actually go into the detail and see what it is. And depending upon your access, you may be able to go down and see an image of the invoice. So just so the viewers know, we're scanning in all of our invoices to support all of our payable data. And the way that the board is receiving the information is a very summarized view, and they don't actually see the support. And this is going to improve that reporting, or should.
So that'll save you time answering questions.
I think I will always be answering questions.
Okay.
I don't know. Jamie's the chair of finance now. You might have to be able to just,
Right.
It would be helpful, clearly, if we could just get in and see the details. That would eliminate, more than half the questions, I would assume, just right off the bat. One of my concerns, quite frankly, on this is I have not had a chance to go through every single one of these documents and for them. So I would be reluctant, unless there is a critical need for right now to get an approval vote. Give us until the next meeting to get the approval vote so that I could go through those. Is there anything critical that says waiting for the next 2 weeks or 3 weeks till the next finance is going to be problematic?
Nope.
Okay. Jim,
we just
on any issues with that?
What's that?
I said, any concerns with that?
I don't have any. No, I think the proposal sounds great to me, but I think digging into it so that everybody is totally comfortable is, a great idea.
Okay, Matt, you got your hand up?
Yeah, I just want to let you know that the timing, we're going to need some time to plan out the system, which is going to be like 3 to 6 months before we turn on modules. So delaying it for 2 weeks or more, or even 4 weeks is not going to change the timeline.
That's what I suspected, but I don't know what I don't know. So I figured I'd at least ask the question in case I was clear. Dawn, did you have any concerns with that, on delaying that?
No, I don't.
Okay.
No, I think it'd be great to make sure we have all the information.
Okay. And that Matt will give you time to look and see whether or not the ability to drill in is there. Tom, yet?
Yeah, I was just going to say, I'd like to know more about the ability to drill in too, Jamie. And my point was, we just need this done by the end of May so that the central office has a little bit, I don't want to say free time, but a little more capacity to handle starting to work on this in July. So I want to capitalize on that time when there aren't a lot of teachers and administrators coming into the central office. I want to give them a chance to work with Tyler, because really August, middle of August through September is absolutely crazy for the business office. Yeah. So as long as we get it done before the end of May, I'm completely fine.
I see no issue with that. And I normally, when we talk in the next meeting about the timing, I would expect that finance doesn't normally go at the very end of the month. So I would assume it's sometime, say mid-May or so, we should be able to get it through.
Mm-hmm. Sounds good.
Expectation, unless people see some issue with it that it can't carry the day.
Okay. Thank you.
Okay. Next item was Fremont tuition in the general funds account receivables. So Matt, any narrative you could give us on that?
Yeah, so the latest invoice that we sent out was in April. So they have more 30 days to pay it. And as of now, they are current. The amount outstanding as of, well, it was April 16th when I looked, was $1,105,743.70.
And then I believe there's a second billing still to come or still to go to them that we would expect as revenues of about 961. Is that correct?
Actually, the budget has 960,000 for the remainder of the year. My gut's going to tell me it's going to come in closer to about $1 million. There's one
And that's
more
based-
billing coming.
And that's based on the formulas that are part of the contractual agreement with Fremont that determines what that number is.
That's correct.
Okay. And then the other receivables.
Can Gordon, can you unmute Tom, please?
Thank you.
Oh,
Yep, just did.
I thought it was kind of some bizarre upside down finger thing that you're giving me there, Tom. I wasn't quite sure how to interpret it.
No, I was pointing to my mute button with trying to carefully do it.
Oh, you were
Yeah.
pointing at the Red Sox sign on my
No,
screen.
My,
so-
my cat keeps going around, and my cat is really loud. She's Siamese. So I've been muting myself so you won't hear my cat, right? And then it won't let me unmute after I mute. So I just gave up. You can hear the cat. You'll live.
Yeah, just so you guys know, for the school board meeting as well, I do have mute allow users to unmute off, just so that if somebody happens to get in, they cannot speak.
Thanks.
Okay, go ahead, Tom.
Thank you. I just wanted to ask Matt for the public's sake. So Matt, when you were talking earlier that we have about, I'm just going to use round numbers of 1.5 million, 1.6 million at this point that's unencumbered, but then we may have, does that include the amount that you're anticipating getting from Fremont for tuition? Or are we going to have a lot more unencumbered? Because I know that, just so the public understands, right now there are a tremendous amount of savings because the district isn't in session. The people aren't at the building. Heat, electricity, mileage, substitute teacher pay. It's dramatic. But I also want everyone to understand that there are going to be potential costs with regard to special education and compensatory ed. So we're going to work on that. It's hard to say what the numbers are going to be because the situation's been so fluid, but I just want to make sure that everyone understands that we need to make sure that the kids get the services that they need and that they're up to speed. And we're working hard to figure out all of that and what summer school is going to look like for our kids, because we still don't even know if we're going to be able to have extended school year for special ed in a physical location. It may need to be remote. So I want everyone in the public to know clearly is the I'm just going to say 1.5 to be conservative, Matt. Did that 1.5 million that is unencumbered for the end of the year, does that include the revenue from Fremont for the tuition?
No, it's no revenue. It's the it's actually 1.6 is the unspent appropriation. It's our budget to spend. It's not the revenue side.
Okay, so what happens? What will happen when the revenue comes in? Where will we end up? Still at 1.6?
So basically, to determine what your balance is at the end of the year, you have to figure out what your revenues are over budget, and then add to that what you don't spend out of your appropriations. Okay. So say for example, we budgeted, we've got like $960,000 left for our revenue budget for Fremont tuition. If we bill for $1 million, we're going to get that means we're going to get $60,000 above our budget. Okay. And then that just gets added to the amount of our unspent appropriations. So,
Okay.
say $1.6 million of unexpended, then you add in 60,000, so it'd be 1,660,000. And that would be the amount that gets used to reduce the tax rate for next year.
So it's not really clear yet until we see what really happens over the next month.
Yes, that's correct.
Okay. All right. Thank you.
But that's actually the next item on the agenda is
Oh, I'm sorry.
Matt's doodle pad on what would be the estimated property tax and impact fee scenario if the encumbrances stayed. Well, let me rephrase that. I think the question that you got, Matt, was what would it look like in order to be able to have a no tax impact scenario by the end of the year? I believe was a question you're trying to address. Is that correct?
Yes. And let me pull up my email here. So there's two pieces to this. Okay. So last year, the school board retained $400,000 in what's called the contingency fund. And really, it's just a reservation of unassigned fund balance. And to be used, they can either retain it or they can use it to reduce the tax rate. The board can use it for emergency expenditures, but there's a process for that is very difficult to hurdle. Okay, so if the school board were to release the $400,000 in contingency funds plus another $850,000 of unassigned fund balance, this would result in an increase of the tax rate to Kingston of 6 cents and a decrease to the tax rate in Newton of 5 cents. And so $850,000 is really the magic number that splits the raise and decrease that would end up with a zero tax increase for both towns combined.
Okay. Jim? You're on mute. Gordon, can we get Jim off mute? As much as I hate to say that.
He's not on mute.
He's not muted.
He
Something's
shows
wrong.
He's muted now.
Yeah.
Yeah.
You got to be unmuted again, Jim. Hold on. We weren't picking you up at all.
There
Try
we
again.
go.
Yeah.
His microphone's not working.
Your
No.
mic's off. No. Got nothing. No. Can't hear you.
Okay, how can you hear me now?
Now we can clearly.
Okay, thanks. So, Matt, when you're talking about a 5 or 6% increase or a 0 cent increase, you're talking about the property taxes that are due to the school budget. This doesn't include the property tax portion that come from the town budget, right?
Yeah, that's correct. And
Yes.
I want to make a little quick clarification there. When I'm looking at the tax rate, I'm including both the state share and the local share of the tax rate. So if you look at your tax bill, I'm combining the two numbers together and trying to figure out what the change is going to be.
And not the county. Are you looking at the county also? No, okay.
No,
Just-
just the school
Just
only.
the school only.
So if my summary to that would be is to net a virtual zero impact, 1.25 million has to flow to the taxpayers. That would be the magic number. The assumption, the 850 came from assuming the 400 that was previously held flows. Correct. So the real number is 1.25. However it gets there, it gets there. That's a proper understanding. Okay, Tom.
Yep. I just wanted to remind everyone that due to the uncertainty with COVID-19, it would probably be prudent for us to have a conversation on the next agenda for the Finance Committee for a recommendation for the school board about this topic. So the variables that we need to consider as a team and a community are as follows. 400,000 automatically will go back because we kept it last year. We have to decide how much do we want to keep for this next year. And there is a slight concern at this point that we're going to have difficulty collecting taxes next year. So Fremont already reached out to me with a little bit of concern early on. And at this point, we don't worry about it as much, but the uncertainty of the COVID-19 situation, if there was ever a year that we want to consider holding back a little bit more to be safe on the revenue side, it would be this year. So it's just if you were ever to hold back the 3% that you can by law, is it 3%, Matt?
It's 2.5%.
2.5%. This would be a time to consider that. So holding that back would be about $800,000. So I think what Matt and I need to do is look at the expenses for the 6 items that I outlined earlier, look at the revenue, look at everything that's coming in. And as soon as we get everything figured out, bring a synopsis to you as a team for you to recommend to the board. We're all over it. We just can't tell you until we get some of these numbers in from the vendors and choose someone to do the bathroom and the work at the high school and all of those things. But also we need to see where the Fremont tuition comes out and kind of, it's a little bit dynamic right now, but Jamie, I think it's really good to start talking about it early.
Yeah, I agree. I'll work with you on the agenda for the next meeting. And we can certainly address that. We are clearly living in some uncertain times, as evidenced by what we're doing right now. Jim?
Yeah, regarding the money that we're saving by not operating the schools, the buildings, how does our transportation costs for Salter, for the bus company, are they reduced at all, or is there something in the contract where that allows for that?
Tom?
So at the beginning of April, we asked this question. They asked us this question, and we were under the impression that we'd be back to school May 4th. So we had to maintain our bus drivers and be ready to go. You know, I mean, we have not, now that we know that we're out for the rest of the year, there will probably be some savings with Salter with regard to fuel. But I don't know the answer to that yet, because you have to remember that the minute that school reopens, we need everybody back. So it's a really tricky situation.
Well, right. But has anybody reviewed the contract to see what our options are?
Matt?
Yeah, the contract didn't anticipate this kind of environment.
Right.
On the flip side, we're still obligated to transport, like if there's an emergency, a full-blown emergency, where we have to transport residents of its 5 towns to the high school to get inoculated, we have to use our transportation company to accomplish this task. It's really in our best interest to keep paying for the contract to make sure that we can fulfill our obligation to our communities.
Jamie?
Yeah, go ahead, Jim.
I understand that, but at the same time, Salter's costs are significantly reduced right now. They're not incurring costs. They're probably paying some of their people unless they've furloughed them. I would think that asking them for some sort of consideration wouldn't be out of line regarding the fact that whatever their bid was based on, their costs are significantly less.
Tom?
I would agree with that. It's time to do that. It's feels like it's been a month, but the announcement from the governor that we're on remote learning until the end of the year just happened 3 business days ago.
Yeah.
4 business days ago. So where we need to contact Salter and have a conversation with them. I do think it's important to note that it's my understanding, and we can double check this, that they kept their drivers on because we thought that we were reopening school May 4th.
Right.
So we've been taking it in 4-week chunks. All of a sudden, we've been handed a 7 or 8 week chunk.
Yeah.
Right. So we do need to address this again. And my message to Matt was, you know, if we want to work collaboratively with them, some of the room is in the particularly the fuel costs, because if they're not buying the fuel and using the fuel, then we shouldn't have to pay for it. Right. That's a consumable. It's not but the person part is kind of like our paraprofessionals. If we stopped paying our paraprofessionals that are hourly, we're going to lose them, and then getting them back would be very challenging, and we have to have that when school opens.
Yeah.
So the question for Salter is, how do they maintain their staff for when school opens? And Jim, you bring up a good point. The year is now we know we're on remote for the rest of the year. definitely, Matt and I will give them a call tomorrow.
And we
Yeah.
should also find out about whether or not they've laid their people off. If they've laid their people off, we ought not be paying them for not laying them.
I agree with that completely. I think the whole game changed last Thursday.
Jamie,
Go ahead, Jim.
also, besides fuel, there's capital costs that they're saving on. They're not adding up the mileage that they don't have the depreciation on their equipment. There's, a number of areas where they're saving money, I would think.
I agree completely, Jim.
Thanks.
Okay. One thing I just want to get back to, I kind of skipped over number 7 because I thought it was number 8. So the number 7 was property tax and impact fee payments. And correct me if I'm wrong, the information you provided was that both Kingston and Newton are current on both and through the year. So all those collections are in. Is that correct?
Yeah. And one other thing I want to point out is under impact fees, we have 6 years to obligate impact fees and spend them. So currently there are no outstanding impact fees that are threat to be refunded.
Question, Jamie?
Yeah, go ahead.
So there are none that are at risk, but are there impact fees, a pool of impact fees that we're entitled to that we haven't collected?
If
Of
we're
any
entitled-
substantial amount. I'm not talking,
I haven't been notified by either town that they've collected any fees, but I'm expecting them to report them to me until maybe summer.
okay.
And by the way, collection would be from say last September to now.
And Jamie,
Yeah, go ahead,
my
Jim.
understanding is that we have to bill them. Is that how it works?
It should be that way because under the statute, both Kingston and Newton have to pay a proportional balance or a proportional amount. And that proportion rate comes out in late October, November. So it's better for the district to ask for the funds than it is to just have the towns push it.
So that money would be the next year's school budget.
Yeah. So, but I can contact the towns in the fall and include impact fees on the estimated revenues, which would impact the tax rate. And then we collect the impact fees from the towns really at any point after that moment, all the way through June 30th.
So those would would impact the November tax bill?
Yeah. So if they have a balance and we ask for them to balance, it will impact this coming November's tax bill.
Thank you.
Okay. Then I believe, Matt, number 9 and number 10, unencumbered fund balances and total revenue, we've covered that in the discussion, unless there was more that you wanted to make sure that we were apprised of.
I think that's good.
Okay, public comments I don't think are possible in this venue, or email them in, I
Notice.
guess.
Yeah, hold on 1 second. I want to go back. There's another agenda item in there, and basically it's the revised revenue report. I'm glad it ended up in there. It's the last one.
Okay.
And that one there shows $2 million left to be collected. It's $1,013,000 for unassigned fund balance.
Yeah.
And we're budgeting a net income loss there. We're expecting school building aid of $269,000 to come in from the state, and then so Fremont tuition of $961,000. Now, notable overage over budget would be we put in adequate education of $3,100,000, and we received $3,300,000, which is $174,000 in excess of budget. Okay.
Yep. Thank you.
Question, Jamie?
Yep. Go ahead.
This is the report that has, I got to enlarge this. Under the first column for a balance, 35 million.
Yes.
And again, those numbers are in brackets. So those are negative numbers. But
Revenues come in,
but they're positives on our balance sheet. Is that right?
Yeah, they're,
kind of.
yeah,
Do you want to run through that?
Revenues are
Explanation?
credits. Revenues are credits, so they show up with brackets on them.
that's
Debits
correct.
are debits, so they show up without brackets on them.
So when you look at the far right column, which was 2000, I just messed up my
Yeah, a
2000.
positive.
2,013,000.
2 million, right? That's $2 million that we're waiting to collect.
Yeah, and in that is 1,013,000 that we'll never collect because that's the budgeting for net income loss. So we have to report our use of fund balance as a revenue to balance out the system.
So that's balance sheet accounting.
It's governmental accounting.
Yeah, okay.
That's where we started when we first had
That's what they're trying to give me the 411
we're trying to understand what the paper said.
And Dawn, if you'd ever like to have a meeting with Matt just to go over things, you're always welcome to Matt could do one of these virtual meetings and give you kind of some more insight if you'd like him to train you some more on the software and the budget.
Yeah, awesome. That would be great. Matt's going,
Okay.
great, one more thing to do.
It's fine.
Keep you busy. It's 5 o'clock. Is there any issue that we have not hit that somebody wanted to comment on before we wrap up? Tom?
I just wanted to mention that the disclosure that you read at the beginning of the meeting should outline that there's no public comment.
I thought
we
it
should-
did, but I wasn't sure.
And if it didn't, then we should just take it off the agenda because we really can't have it in this format.
Okay.
Well,
What I read was we added that if they wanted to communicate with us, they could email Matt.
Exactly. That's what we do.
yeah, and so the only email I received in the middle of this was from Annie, and she was wanting me to summarize the savings on the accounting system. And I just replied back to her.
Yep, we did that.
Okay.
Yep.
All right. If there is nothing further, then we will close up the meeting. So the meeting is adjourned.